Hey Cardano, this is the loans tutorial for the P2P-DeFi wallet. I changed my mind about doing options next. There were a few bug fixes since last time. To get them, you're going to need to go into the git clones directory we created from the installation instructions, go inside the P2P wallet, then you want to right click to open in terminal. Move this over to the side. And then you just want to do three commands. Git pull will get the latest from GitHub. Cabal build will rebuild the executable with the bug fixes. And then this command is going to move the new executable to your home. It's going to replace the one we installed before. It could take a few seconds. This internal command can be slow. And now if we go to home, this executable now has the bug fixes. And we can launch it by double clicking. Before we get started with loans, there are a few key points about the protocol that should be mentioned. The first is that the lending protocol being used, Cardano-Loans, it does not have its own liquidity. It doesn't need its own liquidity because it can rely on the DEX for that, the Cardano Swaps order book. By outsourcing the liquidity concern, the lending protocol can focus on more interesting features like an on-chain credit history, direct payments to lenders, and support for secondary markets. The second point is that you cannot be a borrower and a lender in the same transaction. This is a limitation in the smart contracts themselves, one that might be possible to lift in the future, but for now, you need to keep the actions separate. The P2P wallet will remind you when necessary. The last point is that it still isn't possible to sign loan transactions using a hardware wallet. Unfortunately, that bug hasn't been fixed. So in this tutorial, we're going to be using the command line keys. That's it for the points. Now we can get started with the lending. Going to testnet, I have a few profiles set up since it makes it easier to be different people. Bob is going to be the borrower and Charlie is going to be the lender. Going to Bob, we go to lending, and we need to add our first loan wallet. Adding our first loan wallet is exactly the same as adding a DEX wallet. There's an add wallet button under me, and it brings up the same menu as with the DEX wallet where you pick one of your staking credentials. The staking credential you choose can be used for both borrowing and lending, just not in the same transaction. You can use separate staking credentials for each, like for borrowing and lending if you wish, but it isn't necessary. If you wanted to choose a different staking credential, then you do need to add it to the staking page. When you add the wallet, the P2P wallet will check the history and current state of the credential being used as both a lender and a borrower. We're going to ignore the notifications for now. There are a lot of different pages here, but the usage is extremely basic. All of the borrow information is underneath the borrow page. All of the lending information is underneath the lending page. We'll cover research last. Underneath borrow, you have open asks, the lender offers, active loans, credit history, and then the transaction history. If you have ever asked a bank for a personal loan or a mortgage, the flow for this protocol is exactly the same. The borrower asks for a loan of a certain size and duration, and then they offer to use certain assets as collateral. The lender looks up the borrower's credit history and evaluates the offered collateral to determine whether or not to lend to this borrower. If they choose to, they can offer the terms where they set the interest rates, collateral ratios, and the payment schedule, etc. The borrower can then view the lender offers and decide whether or not to accept any of the lender's terms. If they choose not to, the borrower can go back to their asks and change their asks. Maybe they ask for a different loan asset, or they change the duration or change the collateral assets and hope that the lender gives them better terms. When they're ready, they can accept the offer from the lender offer page, which will create an active loan, which can be viewed here. The loan doesn't start until the borrower and lender agree on the terms. Once agreed upon, the protocol will trustlessly enforce the terms. The result of the loan is recorded on-chain to establish a trustless credit history, which will be displayed something like this. As far as I'm aware, this is the first DeFi lending protocol with a trustless credit history for all borrowers. So to reiterate the flow, borrowers ask for a loan. These asks are posted on the blockchain. Potential lenders can then view all current asks that are posted on the blockchain and decide if they want to make any loan offers to the borrower. They can even see if any other lenders have already created offers to the borrower. Borrowers can review the lender offers and decide whether or not they want to accept it. If they do accept it, it becomes an active loan and the protocol will enforce the terms. I'll walk you through the exact flow, starting with creating an ask for Bob. Bob currently doesn't have any asks. To create one, we just have to click this new create new ask button, and this menu pops up. It looks much better on higher resolution screens. I'm using a 1080p monitor for this tutorial just to show what the wallet looks like on basic monitors. Every field has an associated help message. If you click on the question mark, a help message pops up. You may need to hover over it a bit for it to format correctly, but every field has the help message. So if you forget anything in this tutorial, you can check out the help messages. So we can specify the loan amount and asset. So it could be 10 ADA, it could be 100 JED, doesn't matter. Then you specify the duration in number of days. So this is 30 days. And then you specify the collateral. There are two very important points with respect to the minimum UTXO value requirement of Cardano. The first is that the collateral UTXO must be stored with ADA due to this min UTXO value requirement. In order for this ADA to count towards your collateral, you must offer ADA as collateral. If it isn't listed as collateral when you accept a loan, the min UTXO value will not count towards your collateral. It will be extra. Always use ADA as collateral, even if the dominant collateral asset you want to use isn't going to be ADA. The second point is that loan payments to lenders must also be stored with a min UTXO value of ADA. The ADA amount is usually about 1.5 ADA per payment. If you borrow ADA, this isn't really an issue since the payment amount itself likely covers the min UTXO value requirement. But if you borrow another asset like JED, the min UTXO value must be paid in addition to the payment amount. You will not get this ADA back. It is not a deposit. It is an additional cost to you. Because of this, when the loan asset is not ADA, you should make payments as infrequently as possible since it is a flat 1.5 ADA fee for each payment. This is something you must account for when deciding which asset to borrow. Babel fees is not going to help here. We're going to create two asks. The first one will be 100 JED, and we'll say it's for 10 days. We're going to use ADA as collateral, and we're also going to offer AGIX as collateral. That's the first ask. This is the deposit that must be stored with the ask UTXO. This is something you will get back when the ask is closed. And we can now see the ask in the builder. Let's create another ask. This time we'll ask for 100 ADA. We'll do 10 days again for the duration, and we'll also offer AGIX. So as you can see, by default, the P2P wallet will say ADA is always a collateral. You can remove it if you really want to, but it's not advisable. And confirm. This one has this deposit. The change says that we need 0.02 AGIX. This is because the protocol wants you to prove that the assets you specified as collateral are actually assets. The only real way to do that is to store it as a value in the UTXO. Only the smallest possible amount of each asset is required. By this, I mean the asset's equivalent of one Lovelace, whatever that is. For AGIX, the smallest unit is 0.01 AGIX. So we're creating a loan ask using personal stake. This ask is for 100 JED for 10 days. This ask is for 100 ADA for 10 days. We're offering ADA and AGIX as collateral for both. You can edit it, remove from builder. Bob is going to balance and submit this transaction. He's going to have to sign with command line keys since that hardware wallet bug still hasn't been fixed. So here we need AGIX. So we have to search AGIX. This one has 400, so we'll use this one. And now we need collateral and a change address. So reset the search, choose the first collateral, use this one as the change address. And now we can build this transaction. So the fee is 0.39.4 ADA. The Cardano-Loans protocol cryptographically prevents identity theft. It does this by requiring borrowers and lenders to prove who they are by approving with the associated staking credential. So if we go to the required signatories, it says that we have to sign with a staking key, even though none of these UTXOs are being spent from the loan address yet. this signature proves that Bob is indeed the person asking for this loan. So we have to export it to sign with the command line. We move to the terminal. We have this command. So it's Cardano, CLI, Conway, transaction sign. You have the body file. This first one here is Bob's personal key. This one is Bob's staking key, which is the one he wants to use to protect his credit history, his borrower identity. And now if we go back to the wallet underneath me, we can submit external transaction. So we just have to type in the absolute path and confirm. This is the transaction hash. We just have to wait for the transaction to actually be added to the chain. Occasionally we refresh to check. The wallet will give you a notification when it's been added. Okay, so we have notifications, and you can already see in the background the two asks. If you go to the notifications, it says that from home for personal, ADA was spent, native asset balances have changed, and then it says ask statuses have changed. Ideally, the notifications would be more specific about what's going on, but this is a prototype. This message is enough to get you to go check your asks. This other line here, some loans require interest penalties, we'll come back to that. So under the ask, this looks pretty much identical to what was in the builder. You have your borrow 100 ADA, borrow 100 JED. This icon is the output reference for the UTXO, and if you click it, it will copy the output reference. The clock tells you the timestamp of when this UTXO was created. You have the number of days, and then you have the offered collateral. You can edit it or close this if you wanted to. You can filter all of your asks or sort them. All of these have their own associated help messages, but you can sort by loan asset, duration, minimum duration, maximum duration, collateral. You have different options for sorting, and you have a help message explaining what it will do. So for example, if we did ADA, now we only see the one ask for ADA. We don't see the JED one. Clear that. Now that the asks have been posted, Bob needs to wait for a lender to make an offer. So we're going to move to Charlie to be Bob's lender. To switch to Charlie, we'll log out of Bob and go to Charlie. And we'll sync the wallet to make sure that we have the most up-to-date information for Charlie. Okay, so if we go to lending, to look up the current asks, we first need to switch to lend because we're going to be a lender this time. And then you're going to go to browse requests. So right now, Charlie doesn't have any open offers. But under browse request, we can search for loan terms we can search for asks that are asking for terms we're interested in. We can specify a specific asset for the loan. We can specify minimum or maximum duration, and we could specify collateral that we want to be used. If we don't care and we just want to see all of the asks, we can leave this blank and just click confirm. And you can refresh the results using this button, and now we see the two asks. You can filter the asks by clicking this filter. So if we wanted to do ADA and click confirm, it'll now search for only loans asking for ADA. We'll clear that. There's a sort. Everything has an associated help message, so you can check them out for more details. Here you can see the two open asks, the 100 JED. This one's for 100 ADA. This button is the output reference for this particular ask. You can see the duration, the offered collateral is ADA and AGIX. This looks very similar to the borrower view of the asks. The only real difference here is this borrower button, this lookup borrower button. If you click it, it will sync the information for this particular borrower. You have the credit score, and if you click on the help message here, it tells you how it's calculated. It's just the percentage of successful loans right now. Current active loans are not included in this calculation. And you can see their actual credit history here. So they have all of these successful loans repaid. If it was a default, instead of success, it would say default. This fingerprint is the loan ID, and if you click it, you'll see the loan history. So the loan started on December 17th at 1:46 p.m. and the final payment was made on the next day at 8:05 a.m. So you can inspect each loan more closely if you wanted to. You can see the terms, like this one was for 100 JED. The duration was 10 days and 5. The epoch, which means the payment period, was 5 days. So this loan was broken into 2 payment periods, each of 5 days. The minimum payment in a given payment period was 10 JED, and there was a penalty of 5 JED if the minimum payment wasn't met. And you can see the collateralization rates here. This icon here means that the collateral was allowed to be swapped out during the life of the loan. The lender has to specifically enable this since it does benefit the borrower. We'll go into more detail of this because this is very similar to what you'll see on the active loans page. But moving on to the loan request, we can see that this borrower actually has 2 asks open, which are the 2 asks we currently saw from the browse request page. But so one of them is for 100 JED, one of them is for 100 ADA. This makes it easy to see that even though you only see one ask for a particular borrower, you can easily check if they're also asking for other loans without you noticing. Then you can also see all of their active loans. Currently, there are no offers from lenders yet, so this is none. But if there were offers, you'd see this button, and then you can view the offers. So this person currently has an active loan for 200 JED. The output reference, this is the expiration information, so it expires on January 8th, and the lender has until February 7th to claim the defaulted collateral. And again, you can look at the event history for this loan. So it started on December 9th at 1:40 p.m. The first payment was made for 5 JED on December 9th at 1:53 p.m. The second payment was made on December 12th at 10:30 a.m. And you can see more information. We'll go over this more when we get to the active loans page, but this is very similar to what you'll see there too. To make an offer, you just have to click this button here, make offer. You can create counter offers to what the borrower asked for by changing things from what the ask was. So here it was automatically populated based off of the ask, but you could change this. For example, if maybe you wanted to do 200 JED or only 50 JED, or maybe you wanted to do 100 USDM instead of JED, you can change that here to make a counter offer. Same thing with the duration. You can actually offer a different duration than what the borrower was asking for. The payment address here, it's a drop-down menu based off of the home page's tracked addresses. So it's the personal here. If you want to use a different payment address, you have to add it to the home page first. The payment address is where loan payments will go when the borrower makes their payments. If the offer is accepted, the borrower will send the key NFT for the loan. The key NFT is the loan bond. They'll send that key NFT to the address you specify here. Whoever controls the key NFT can change the payment address during the loan, and the key NFT is also required to claim defaulted collateral. The interest is self-explanatory. It's 5%. The interest is applied immediately upon the loan being accepted. So the loan is 100 JED. If the borrower accepts this, the outstanding balance is immediately converted to 105 JED. Then you can set an epoch duration, which is how long a given payment period is. By leaving this blank, you're effectively saying that you don't want to subdivide the loan into different payment periods. You don't have to if you don't want to. If you do, for example, if we set this to 5, you now have a few more options. You can now make the interest compounding, where at the end of each payment period, the interest must be applied again. To make it compounding, you just have to toggle it. You can set a minimum payment for a given epoch. So, for example, if we set 10 JED, then the borrower must pay back 10 JED, at least 10 JED every 5 days. It does not need to be in the same transaction. They can actually do 5 JED payments twice, as long as by the end of the 5-day period, they've paid back at least 10 JED. And then if you have a minimum payment, jumped around, you can then set a penalty in case the minimum payment isn't met. You could do a fixed fee. So if we set this to 10, that means that the outstanding balance will be increased by 10 JED if the minimum payment isn't met in a given payment period. You could do a percent penalty if you wanted to. Then the collateral can be swapped out. So there's a help message here that explains it, but the idea is if the borrower is using multiple assets as collateral, By toggling this, you're allowing them to change the ratios of those collaterals, not the collateralization rates, but like let's say if the loan starts out as 100% backed by ADA, maybe the borrower changes their mind and they want to do 50% backed by ADA and 50% backed by AGIX. Toggling this allows them to do that. The relative value, the total relative value of the collateral is still going to be forced to be respected by the protocol. It's just how much of each asset is actually backing it. This feature definitely favors the borrower, but if you toggle it, it does make your offer more competitive against other lenders' offers. So it's just an option. The claim period is how long you need to claim the defaulted collateral after the loan expires. So here, this is saying that you want a month to claim the defaulted collateral. If the claim period expires before you claim the collateral, the protocol will consider the collateral lost, and the borrower can reclaim the collateral themselves. This option prevents accidental permanent locking of collateral assets in case the lender is no longer able to claim the collateral. Even if the borrower ends up claiming the collateral, it still counts as a default on their credit history. And you can set a deadline to accept this offer. So if we set it to 5 days, the borrower has 5 days to accept this offer. And then finally, these are the actual collateral rates. You must set the relative value for each collateral asset relative to the loan asset. So how much is a collateral ADA worth relative to the JED being borrowed? If we set this to 2, the borrower must lock up 2 ADA for every JED borrowed. We could do the same for AGIX, set it 2 to 1. So it's 2 for every JED borrowed. It could be that 50% of it is backed by ADA and 50% of it is backed by AGIX, which means that the borrower would need to lock up 100 ADA and 100 AGIX of collateral in total. So these terms are good. We'll do confirm to actually create this offer. This is the deposit that will be stored with the offer. You will get this back when the borrower accepts the offer or when you close the offer. If the borrower accepts the offer, this will be included with the key NFT when they send you the key NFT. We will also make the offer for the other one. 100 ADA, duration is 10 JED. We'll allow collateral to be swapped out this time, and we'll set an expiration for this offer. And again, we'll do 2 to 1 for both assets and confirm. This offer only requires a deposit of 2.75 ADA. And now in the builder, we can see all of the information. So we're creating a loan offer for a personal stake for Charlie. Hovering over this tells you whether there's an offer, whether the offer expires and how long you're asking for the claim period. So they each have an offer expiration set. This icon is the payment address you chose for where payment addresses or payments must go. And if you click it, it will get copied to clipboard. On the right side, you see the total amount and for the duration. So this one's 100 JED, this one's 100 ADA for 10 days. The top offer is for non-compounding interest. The loan is broken into 5-day payment periods. So there would be 2 payment periods, each of 5 days. Each payment period has a minimum payment of 10 JED required. And if the minimum payment is not met, there's going to be a fee penalty of 10 JED. And you have the collateralization rates here. It's 2 to 1 for both of them. The bottom offer has non-compounding interest and no loan epoch, so there's no minimum payment required and no fee penalty. This icon means that this offer actually does allow swapping out the collateral during the life of the loan. One thing before you submit this that you really need to make sure of is with these collateralization rates, you must factor in the market volatility of the collateral assets. The collateralization rates control whether this loan is over collateralized or under collateralized. If you set this rate so that it's originally over collateralized, but then the value of the collateral drops relative to the loan asset so that it becomes under collateralized, this is your fault. These collateral rates cannot be changed during the life of the loans. These aren't margin loans. These are real trustless loans, which means you need to be responsible for your terms. So for this 2 to 1 AGIX per JED, it's only a 10-day loan. What are the chances that AGIX drops in value 50% within 10 days? I think that's pretty low, so I think this is fine, but you really need to factor in volatility. Like make sure your offer can't end up being an under collateralized loan if you don't want it to be. Once you are satisfied with all of your terms, if not, you can just edit the actions. We need to balance and submit this transaction. Each offer needs to be stored with the actual offer amount. That way the borrower can accept the offer and start the loan without any other input from you. So this UTXO requires 100 JED, this one requires 100 ADA. If we check the change, we can see that we're missing that. So let's go to personal. We're going to use this as the change address. We need to balance and add the collateral. So let's do this one for the collateral. And now we need JED and ADA. Search for JED. This one has 105 JED, so that should be exactly what we need. And then we also need the ADA, so we'll just use the next one here. And now it's fully balanced, and we can build this transaction. So the transaction fee is only 0.43 ADA. Just like with borrowing, Charlie needs to prove that he is indeed the lender by signing with the required staking key, the staking key he intends to use to protect these offers. So even though he's not spending a UTXO from the loan address, this is used to cryptographically tie him as the lender. So we'll export this. And then we'll go to the terminal to sign it. Signing it is just the exact same command as before, except we're specifying the new keys. So it's Cardano CLI Convoy transaction sign. You got the transaction body. This is Charlie's personal key. This is Charlie's staking key that he's trying to use to be the lender. And then we're outputting it to tx.signed. And now we can go back to the wallet. Underneath me, we can do submit external TX. And then we specify the absolute path. And confirm. So this is the transaction hash, and now we wait for the offers to get processed and added to the blockchain. So again, we can see in the background that they were added. If we go to the notifications, we can see offers to borrowers have changed. The some loans have expired, we can come back to. So here, this looks very similar to what it was in the builder. Offer for 100 ADA. You have the UTXO's output reference, the time it was created, the expiration information. So you have the offer expiration and the claim period expiration, the payment period, and then this button is here again. This allows you to easily keep tabs on the corresponding borrower. So if we click it, and then we want to resync to make sure that we have the most up-to-date information. Now you can see that they're actually current offers. So these are Charlie's offers, but you can see if other lenders have made offers, and you can decide whether you want to try to outbid them for the loan. But this is an easy way for you to check whether the borrower has changed their asks to, for example, if they wanted to see if you'll give them better terms using different collateral or something. And you can edit them or close them. And just like with the asks, you can filter them. You can toggle based off of whether the offers are expired, or you could sort them. Everything has an associated help message. And then the last thing under the lender page is the offer history. This is the transaction history for the offers. It is very similar to the DEX position history. So you have offers closed or created, whether they were accepted, the timestamp. You can inspect it to get the summary of what happened. So these 2 offers were created. In this transaction, 2 offers were accepted. And you can see them here. They were accepted. And you can, just like with the position history for the DEX, you can also search through the transactions to see offers for particular criteria, like loan asset and ones using specific assets as collateral. One final comment before switching back to Bob to see it from his perspective. Offers, even though they're protected by your chosen staking credential, they are located at the borrower's address. So these are actually in this case, they're at Bob's loan address. That means even though you have custody of this offer, you do not have staking control of the offer amount. This means you should only keep offers open as long as absolutely necessary. So if you want to make sure that this 100 ADA stays delegated to you, before the end of the epoch, you should close it so that you reclaim the ADA and it doesn't get delegated to Bob's stake pool of choice. That's everything from the lender's side for now. We'll switch back to Bob. So let's log out of Charlie and go back to Bob, and then we will refresh the wallet. And if we check out the notifications, it says offers from lenders have changed. And if we go to borrow, these are the open asks. But if you go to lender offers now, we can now see the two offers that were made to Bob. And you can see it looks exactly the same as from the lender side, so I'm not going to cover this. If you don't like these offers, you can go back to your asks and change them, ask for a different asset or offer different assets as collateral, and the lender may or may not give you different terms. If you decide you would like to accept the terms, then you just need to click this accept offer button. Clicking it brings up this menu. Accepting an offer requires closing an ask. The ask does not need to be related to the offer. It could just be any ask, but you need to close one ask for every offer accepted. This prevents lingering asks from wasting lenders' time. As a trade-off of this, if you want to accept an offer but don't have any asks to close, you will need to create an ask in a separate transaction first. The idea here is that if the borrower accepts a loan offer, their asks should be removed from the blockchain. That way, lenders don't continue to make asks to borrowers who have already filled their request. So I'll choose the first one here. And now it's telling me the loan amount and the collateral rates, and it's asking me to specify how much of each asset I'm going to use as collateral. For the first one, I'm going to back it 100% by ADA. So I need to use 200 ADA since it's a 2-to-1 ratio here, and click confirm. The ADA collateral covers the deposit requirement. I'm also going to accept the other one, and now there's only one more ask to close, so I'll close that one. And this time I'm going to only use enough ADA to cover the min UTXO, and I'm going to use AGIX to back the rest of it, and click confirm. And again, the ADA collateral covers the deposit requirement. You should always try to do this. And if we go to the builder, we now see the two loan acceptances. You do not need to manually close the associated asks. The builder will handle that. Same thing with the offer. This loan offer acceptance is going to close the ask that you chose and the corresponding offer in order to create this new active loan. So here, the information, you have the output reference, the borrower identity that it's under, you have the claim period that's going to be used, the payment address, and then the loan information. We've already covered this, so I'm not going to cover it again. To balance it, we actually need to back it by the specified amounts of collateral. So Bob needs to back one of them by 196 AGIX and 4 ADA, and then the other one by 200 ADA. So we'll use this address as the change. And then we need AGIX. This one has 400, so that works, and it also will cover the ADA that we need. Reset that so we can then find collateral, and now we can build this transaction. The total fee here is 0.87 ADA. And again, Bob needs to sign in order to prove that he is indeed the borrower. So we'll export this transaction. And then go to the terminal to sign it. So that was the transaction for Charlie. We need to use this one. This 02 is Bob and 02 stake is Bob's stake key. So we sign that and now go back to the wallet and submit external transaction. And confirm. And this is the transaction hash where they were accepted. So now we wait for it to get processed by the blockchain. Okay, and if we go to the notifications, it says ask statuses have changed, offers from lenders have changed, and active loan statuses have changed. And then there's still that some loans require an interest penalty application. So here, both of the asks and both of the offers are now gone. But if we go to the active loans, we now see there are 3 active loans. Just like with the other pages, you can filter. They each have their own associated help message. You can sort them as well. So you can see the help messages for more details. And then this is the same information as from before. You have the loan event history here. And you can resync it if you want to get the latest. So the bottom 2 are the new ones. This top one was here before. Active loans only ever have 1 action possible at a time. So you can either be in a period where you can be making loan payments, in which case you'll see this button where you can make a loan payment, or payment period has ended and you need to roll it over into the next payment period. So this one requires being rolled over into the next payment period. That's what the notification was about. Some loans require interest penalty applications. If the loan is expired, this button would say for claiming lost collateral, but the button would only be enabled if the claim period has actually expired. So let's do a loan payment for both of them and also roll over the prior loan into the next payment period. So rolling it over, just you have to click it. The wallet will figure out how many times the interest and penalties need to be applied. For this one, let's make a loan payment. The current balance is 105 JED. It's automatically populated to be the minimum payment amount. You could do max if you want to pay off the remaining balance. Over here, it tells you how much collateral is unlocked based off of how much of the loan amount you're about to pay off. So we can reclaim almost 10%. I'll take about 11 AGIX and then click confirm. So the remaining ADA covers the collateral. The loan payment is not in ADA though, so it requires an additional 1.3 ADA to cover the min UTXO. So this is an additional fee for this loan payment. And then for this one, let's actually pay off the entire amount. We'll just click max, and now all of the remaining collateral is unlocked. When all of it is unlocked, we don't actually have to worry about this field. It will automatically be reclaimed by the P2P wallet. Successfully added to builder. This is a full payment, so all remaining collateral and deposit will be reclaimed. And now if we go to the builder, we can see making a partial loan payment, making a full loan payment, and then applying the interest and penalties. This doesn't necessarily mean that there will be penalties applied. It just means if penalties are required, they will be applied in this transaction. So let's have Bob balance the transaction and submit it. He needs to actually cover the loan payments, so he needs JED. So we need to specify collateral and then find JED. This one has almost 300 JED, so that'll work. Then we need to specify change address. And now we can build and sign and submit this transaction. So the total fee here is 0.97 ADA. Let's export this. You can see the required signatures here. One of them is this required stake key. So we go to the terminal again. We're going to sign with Bob's key, his personal key, and then his stake key. And now we can just submit the external transaction. And this is the transaction hash. So we can go back to the lending page and wait for that transaction to be added to the chain. In notifications, we can see that active loan statuses have changed, and that notification that some loans require interest applications is now gone. And here we see that there's only 2 loans left, and they both allow making payments. Okay, so you can see the result if we go click on the loan event history. We'll have to resync it. And now we can see that the interest was applied one time, and the min UTXO value did not increase. If it did, we could see by how much here. We could do the same for this loan. Oh, here's the payment that was made just now at 10:35 a.m. So there's 2 more tabs here, the credit history and transaction history. You've seen the credit history before, but this is from the borrower's page. The borrower can see their own credit history here. So you can see the success, you can see the loan event history by clicking. It's in reverse order, so this is the one that was just paid off. So the most recent loans appear first. So if you scroll down to the bottom, this is the borrower's first loan. This is their most recent loan that they've successfully repaid. So you can see your current credit history here. Then the transactions, this is all of the transactions involving this loan address. There are way too many possibilities to have another row here, like with the DEX positions or offer positions, because the offers themselves also appear here. For example, if we click here, we can see the inputs, made a payment, applied interest, and you can see the ending balances, the ending states here. But in the prior transaction, we can see that the offers were accepted and the asks were closed, and then as a result, we have the 2 active loans that were created as a result. So offers from lenders appear here as well. This is all UTXOs involving the borrower's loan address. That's it for the borrower page now. The last thing to show for the flow is what happened to the key NFT. We're going to go back to Charlie and we'll see what happened from Charlie's side when Bob accepted his offers. So log out of Bob and go back to Charlie, and then we'll resync his wallet to get the latest state. So we haven't synced this since before the offers were accepted. So if we go to the notifications, we can see offers to borrowers have changed, and then there's still some loans have expired. So first thing, if we go to the offers, or we go to lend, then open offers, they're no longer here. But if we go to the offer history, we can see that the 2 offers were accepted. So this is the transaction here, transaction summary here. But where is the key NFTs? He should have gotten 2 key NFTs, one for each of the accepted loans. The NFTs went to the home address. So if we go to the transaction history, this is the acceptance transaction, and these are both the keys. So if we go to the native assets, you see some of these are tagged with loan key. You can even filter by key NFT. So there's the loan key. When I do the options tutorial, you'll see that they have their own keys too. So we can filter by only loan key. These are all the loan keys. And you can now click on this fingerprint to look up the loan history. This is the loan state. So you can see that the current loan status is actually that this one is finished. And you can see that it was started on December 17th. The final payment was made. So this loan is actually finished. This key NFT can actually be burned. I'm not going to do that just yet. But from the, so this loan key is actually still active. This is the remaining balance on the loan. You can see the event history down here. It's not super great on this resolution. There'd be more space otherwise. And you can see that this button, instead of it being burn the NFT, since the loan is actually still active, you can update the payment address instead. And if you click it, you can change, if there were other personal home addresses, you can change it to one of the other ones. So I'll close that. I've since fixed the formatting, so now it should appear better for you as long as you did the bug fixes at the beginning of the video. So you can see all of the key NFTs here. The key NFTs are deliberately not locked at a loan address because they are freely tradable. So then if we go back to the transactions, we can also see that there was a payment. This is the transaction where Charlie got paid directly from the borrower. So here, let's burn some of the unnecessary key NFTs. This one is finished, so we can add it to the builder. It also added the UTXO with the key NFT, so you don't have to go manually hunt for the key NFT. That one was still active. This one's finished, so we can burn it. This one's also finished, so we can burn it. And again, each time you do it, the wallet will automatically find the UTXO with the key NFT, so you don't have to hunt for it. So if we go to the builder, we can see that we're burning an excess loan key, and it has the key NFT UTXOs here. So just as an example, I will have Charlie balance this and submit the transaction. So that's the collateral. We need to specify a change address. And now we can build and sign this transaction. So we can now export. It was exported, so we go to the terminal. We need Charlie's keys this time, which are 0, 1. So 0, 1. This time we actually don't need the stake key, so I can delete that one. We only need the personal key. If we go back to the wallet and we click on the keys, you'll see that there's only the one key here. Make sure you don't accidentally sign with an extra key, because then the fee calculation would have been wrong and you'll underpay on the transaction fee, and the transaction will just get rejected. So now we can submit this, submit external transaction. And confirm. So this is the transaction where we burned those keys. So the main takeaway is that the loan key NFTs are in your home page. They're under native assets. And you can just easily keep track of the corresponding loans here. So this one was still active. This button, as you'll see in the aftermarket tutorial, this button is a quick way to add the, it's a quick way to sell the bond on the secondary market. I don't think any of these are for expired collateral, but if they were, then this button would allow you to claim the expired collateral. So we can resync and see if they were successfully burned. After the loan is finished, the key NFTs are worthless, so you should burn them. Yep, they were successfully burned. Native asset balances have changed. This notification here, some loans have expired. This is, if we go to borrow, Charlie actually has a loan of his own, which has expired. And this button actually says he can claim the lost collateral because the claim period has expired. Yeah, it expired months ago. So this could be added to the builder and Charlie can reclaim his lost collateral. It'll still count as a default on Charlie. So if we actually submit this transaction, go to UTXOs, use the collateral for the smart contract, I mean, not the collateral from the loan. Specify a change address, and now it's already balanced because the collateral itself is going to cover everything. So that's the fee. I'm going to export and sign this real quick. According to this, we need both the stake key and the personal key for Charlie. So we actually do need this where we're using the personal key and the stake key. And now we come back here and submit external. And this is the transaction hash for that. We just wait for it to get added, and then this should be updated, and we can check the credit history to see that it was successfully logged as a default for Charlie, even though Charlie reclaimed the collateral. Okay, that took a little while, but it finally got added, and the notification says active loan statuses have changed. That other one that some loans have expired is now gone. And it's no longer here, but if we go to the credit history, this is the most recent loan, and you can see that it successfully logged it as a default. And if we look at the loan event history, we can see that we just reclaimed the lost collateral, claimed by the borrower. Finally, there's one last thing to cover. We've covered the borrower, we've covered the lender. The last thing is research. It is for what the name implies. If you aren't sure what terms to offer, you can see what other people are currently offering and what terms are currently being used for active loans. So you can switch between current offers or active loans. And you can filter by specific situations. You can search for a specific collateral asset. Maybe you're not sure what kind of collateral rate to set for a specific asset. You can set that here. Or you can leave it blank and just click confirm to see all of them. So for example, if we did active loans and click confirm, it'll sync all of the active loans. These are the current active loans. You can see the borrower's history for each one, and you can see the current terms. So to put it another way, it allows you to see what the current market thinks about interest rates, collateral rates, etc. And yeah, you can still filter and sort based off of the different criteria. Everything has an associated help message, so I'm not going to cover that here. That finally concludes this tutorial. It was definitely long, but there was a lot to cover. This lending protocol really is the first of its kind with all of its features. If you find any bugs or have any questions, please reach out. I will try to address them as quickly as possible.